Chapter 2. Understanding the game. You have to learn the rules of the game, and then you have to play better than anyone else. Albert Einstein. Besides those managing a firm, there can be many other people with a genuine interest in understanding and gaining insights into the economic and business realities of a firm. These can include people who provide equity and debt to a firm, as well as a firm's employees, customers, suppliers and competitors, not to mention government regulators, taxation authorities and the general community. Quite often, these people can lack the power to require a firm to give them information that will help them to know what is going on in a firm. And firms may not want to give people this information unless they must. Gradually, there has developed a complex web of rules designed to support the provision of general-purpose financial information to parties not managing a firm who may lack the power to require firms to give them the information they want. To play the game, you have to learn the rules. In this chapter, we'll look at some of these rules. Managers of a firm can ask for whatever financial and other information about their firm that they want. They are constrained only by the limits of practicality and costs. There are no rules or regulations setting out what they can or cannot be given in terms of financial information. Similarly, some people outside of firms have the power to ask for information from firms and to get what they want. For example, banks can sometimes do this. If a firm wants to borrow money from a bank, the bank can ask for various information, and often they have the power to get the information they want, or at least quite a bit of it. However, when a firm provides financial information generally to a range of people outside the firm, there are a lot of regulatory requirements it needs to follow. This chapter looks at the regulations imposed on firms in Australia when they provide financial information generally to people outside of firms. This is useful to understand for several reasons. These rules can help us understand why there are many similarities in what firms include in their financial statements and how they are presented, and why they have quite a few differences as well. Also, as most firms only want to keep one set of accounts, the information managers are given internally within a firm can be shaped by the rules firms are required to follow when providing financial information generally to people outside a firm. If we want to play the game, which is to use a firm's financial statements to better understand a firm's economic and business realities, then we first need to understand the rules of the game. In this chapter, you can also ask yourself whether accounting is a game. Is it a game where we can seek to manipulate and move around accounting numbers, within the rules of the game, of course, to get the results we want? Or is accounting something else? 2.1. Rules of the game. If you're going to play a game, then you better know the rules, because one day you'll need them to save you. The Rules of the Game, a 1939 blockbuster movie. Financial statements summarising the accounts of a firm have been produced by firms for many centuries and included as part of their accounts. However, it was not until the late 19th century that financial statements were more commonly developed as separate documents to the internal accounts of a firm and provided to external parties. Prior to this, a firm's financial statements were usually only for the eyes of those within a firm, as were the rest of the internal accounts of a firm. They were generally private to a firm, not something appropriate for public discussion. Just like the way most people treat their own personal financial information today. It is not something you generally splash around on Facebook. Over the past 100 years or so, this has been progressively changing. Those providing debt to firms, that is the banks, increasingly found they had the power to require firms to disclose various financial information. It is the same with banks today. For example, they have the power to require individuals who want a mortgage to buy a house to provide personal financial information about their income, assets and liabilities. Also, with the increasing separation of management of firms from the equity ownership of firms, there has been an increasing need for equity investors to be given financial information. Where equity investors have lacked the power to require firms to provide it to them, regulatory rules have been developed to require firms to provide to the public certain information in their financial statements. The business activities of firms affect many more people than debt and equity providers to a firm. Employees, customers, suppliers, competitors, regulators, taxation authorities, and the general community all have a genuine interest in what firms are doing. Although regulations requiring firms to disclose financial information to the public were initially driven by the needs of equity investors, particularly those investing in our listed equity markets, a firm's financial statements have become increasingly of interest to people with a wide range of interests in a firm. However, it is important to keep in mind that the business model underlying double entry accounting, as summarised by the fundamental accounting equation, only considers the impact of transactions and other activities of a firm on the firm itself and on its equity owners. We discussed this at section 1.3 in chapter 1. A major limitation of this business model is that it does not consider the impact on other parties of what the firm does. Growing regulation. An amusing example is Dun & Bradstreet Corporation. This purveyor, i.e. seller, of financial information on listed companies does not in 1940 reveal its own earnings to its stockholders. Benjamin Graham and David Dodd, 1940, page 43. In the late 19th century, the increase in US firms providing financial statements to external parties may have been partly due to the rise of professional managers who were separate to the source of equity capital. The same person increasingly did not supply the equity capital and run the business. However, the key driving force for the increasing role and importance of financial statements was the rise in significance of the banking sector in the US. This group, unlike often equity investors, more and more had the power to demand financial information from firms, which they increasingly did. In the 1930s, there was a further significant increase in the availability of financial statement information in the US with the introduction of the Securities Act in 1933 and the establishment in 1934 of the Securities and Exchange Commission, SEC. This legislation forced many US firms to supply financial statements, particularly to equity investors who, unlike the banks, often did not have enough power to demand financial statements from firms. Nevertheless, not all firms provided their equity investors with a great deal of information, as Benjamin Graham and David Dodd noted in 1914 about Dun & Bradstreet. Since that time, more and more countries have introduced various rules and laws to require disclosure of information by firms to equity investors and to the public. It is now vital to comply with these rules when providing accounting information to parties outside of a firm. This differs to the situation when accounting information is provided to managers within a firm, where there are no rules. For this reason, we often talk about financial accounting, providing accounting information to people outside a firm, and management accounting, providing accounting information to people inside a firm. These are two aspects of accounting. However, it is important to remember that a firm usually has only one set of accounting information. It simply has different ways of presenting and using this accounting information, depending on whether it is for people inside or outside a firm. We will look at financial accounting in this chapter and in chapters 3 and 4. We will then look at management accounting in chapters 5, 6, 7 and 8. Yet there is only one accounting seeking to help people connect to the economic and business realities of each firm. As most firms want to keep only one set of accounts, the internal management accounts will usually be based on the same accounting information that is given to external parties. Although accountants are free to provide any information to managers that they ask for, it is usual that most accounting information in a firm is organised in a way that conforms to the financial accounting requirements. So, understanding the rules of the game for financial accounting, where a firm is reporting to parties outside of a firm, can also help us when we are trying to use and make sense of accounts provided to us as managers within a firm, because the same ideas and concepts are often used for both. Where the rules come from. We'll now look at the rules that firms need to comply with in Australia when providing general purpose financial statements to people outside a firm. These rules are very similar, although not always exactly the same, in many other countries such as New Zealand, UK and Canada, in Europe, for example Germany and France, and in many countries in Asia and Africa. However, these rules, although similar, are enforced by different regulatory bodies in each country. We'll focus on financial statements provided by listed companies in Australia. We'll also focus on equity investors as one of the groups of people with a genuine interest in using financial statements to better understand the economic and business realities of firms. However, there are many different types of firms than simply companies, and there are many different sorts of people with a genuine interest in companies than simply its equity investors. As we focus on companies and their equity investors, it is important to keep in mind that there is much more to the game than simply listed companies reporting to equity investors. GAAP. Generally accepted accounting principles, GAAP, are the rules of the game that accountants need to follow when preparing financial statements. They can vary from country to country and only apply when we are providing financial statements generally to outside parties. They do not apply to accounting information used within a firm, management accounting. However, as we mentioned earlier, these rules will often be followed by accountants preparing accounting information for internal use, as it is convenient to have one accounting system within a firm that uses the same rules. GAAP are the rules that set the minimum standards that must be followed by listed companies, and many other businesses as well, for their external financial reporting. These rules are complex and voluminous. GAAP in Australia for listed companies comprises thousands of pages of material from the Australian Accounting Standards Board, AASB, Australian Securities and Investments Commission, ASIC, and the Australian Stock Exchange, ASX. These rules also keep changing, generally not all at once, but gradually, here and there, over time. There is no way any one person can know all these rules, and these written rules are not even all the rules. Accounting standards. Accounting standards in Australia are set by the Australian Accounting Standards Board, AASB. The AASB adopts, with very limited changes, International Financial Reporting Standards, IFRS standards, which are developed by the International Accounting Standards Board, IASB, based in London, UK. As well as Australia, over 140 countries adopt IFRS, including New Zealand, the UK, Canada, Europe, and many other countries in Asia and elsewhere, with a notable exception being the US. Now, over 140 countries is quite a lot. That is about 3/4 of the 193 nations currently in the United Nations. Also, of the approximately 49,000 listed companies on the 93 major securities exchanges in the world, over 29,000 use IFRS standards. And companies in Australia cannot simply ignore these accounting standards. They are legally binding for companies in Australia under the Corporations Act. Under the Corporations Act, the Australian Securities and Investments Commission, ASIC, is responsible for the enforcement on companies of accounting standards issued by the AASB. Also, the Australian Securities Exchange, ASX, expects listed companies and other listed entities, such as listed property trusts, to produce financial statements that comply with these accounting standards. So if you are listed on the stock exchange in Australia, you will need to produce financial statements that conform to the accounting standards. Accounting standards are also legally binding on government bodies and on most other private sector entities, such as sole traders, partnerships and trusts, through various legislation, ministerial directives and other government authority. Generally, accounting standards are legally required to be followed by all forms of businesses and government entities in Australia. Also in Australia, there are three main professional accounting bodies: CPA Australia, Chartered Accountants Australia and New Zealand, CANZ, C-A-A-N-Z, and Institute of Public Accountants. Members of each of these bodies are required to take all reasonable steps within their power to ensure that entities with which they are involved comply with the accounting standards in Australia. To find out more about each of these professional accounting bodies, click on the links to go to their websites. These websites are worth a visit. Whether to report or not. Although the accounting standards are legally binding for companies and most other entities in Australia, they do not apply to everyone. This is just as well. There are around 2.3 million businesses actively trading in Australia. If every one of these businesses had to produce financial statements that conform to GAAP and all the complex accounting standards and rules, business would probably come to a standstill, although accountants would have plenty of work to do. Most of the businesses I saw as I walked around Yeppoon, see Chapter 1, Section 1.1, would not need to comply with all these accounting rules. Only those companies and other entities such as sole traders, partnerships, trusts and government entities that prepare and use general purpose financial statements need to comply with all these accounting rules. General purpose financial statements are financial statements that are provided to a wide range of users outside of a firm, rather than financial information provided to a specific party, such as to a bank as part of the negotiation of a new debt facility. Any firm can decide to produce and issue general purpose financial statements, and if it does, it will need to comply with all the rules. Also, certain types and sizes of companies are required to prepare general purpose financial statements under the Corporations Act. In addition to the specific rules under the Corporations Act, firms, whether or not they are companies, are also required to prepare and issue general purpose financial statements and comply with all these rules of the game if they are reporting entities. A reporting entity is an entity or firm where you can reasonably identify types of users, such as equity investors in a listed company, that need general purpose financial statements from the firm or entity to make decisions about how they will allocate their own resources. The term entity is used because a reporting entity could be a government entity, such as a government department, and not just a private sector firm. So, it is a matter of judgment whether a firm is a reporting entity or not. If a firm is a reporting entity, then it needs to prepare general purpose financial statements and comply with all the accounting rules. In this section, we've seen that when a firm prepares general purpose financial statements that are made available to the public, they need to comply with a lot of rules. Generally accepted accounting principles, GAAP, is our word for all these rules in the world of accounting. These rules vary somewhat from country to country, and in this study guide we'll be focusing on GAAP in Australia. We saw that GAAP is made up of a lot of written rules. Many of these rules are expressed as accounting standards which are legally binding on companies, sole traders, partnerships, trusts and government entities in Australia. But it is only when firms produce general purpose financial statements that they need to follow these rules. Not every business produces general purpose financial statements. In fact, most do not. If they are required under the Corporations Act or are a reporting entity, then they are required to produce them. And other businesses or government entities may decide to produce general purpose financial statements to the public, and if they do, they need to follow all these rules of the game. In the next section, we'll see it is not possible in the world of accounting to have a written rule for everything, and that there are many unwritten rules in accounting. Also, when applying the written rules, often a lot of judgments and estimates are made by those preparing the financial statements. So there are many judgments, estimates, and assumptions made by those putting together a firm's financial statements. Let us now consider how the fact we cannot have a rule for everything affects how accounting can help, or perhaps hinder, us to better understand and connect to the economic and business realities of a firm. Section 2.2. You can't have a rule for everything. You can't have everything. Where would you put it? Stephen Wright, comedian. Thinking is the hardest work there is, which is probably the reason why so few engage in it. Henry Ford. Man, if you've got to ask, you'll never know. Louis Armstrong. You can't have a rule for everything. There are too many shades of grey in the real world for this. Seeing our learning as simply regurgitating clear-cut black and white facts, perhaps in an assessment at university or for use later in a job, is not going to get us very far. This is too simple and incomplete a view of the world and of what learning about this world involves. Indeed, it is so incomplete that it misses the point somewhat. The world of accounting, just like the world of business and the rest of the world we live in, is not a simple list of clear-cut facts or rules from an expert that are somehow the answer. Life is just not like this, nor is the firm you're going to analyse while reading this study guide. What we need to do is to learn how to learn for understanding and developing personal meaning. We need to make our own sense of the world of accounting and its place in the exciting life of business. We need to actively build or construct our own knowledge and not simply regurgitate someone else's knowledge. We need to build our own knowledge into something that belongs to us, something that is ours. This takes effort and it takes time, particularly time to reflect and think and question. This is what learning is about, real learning. We need to connect what we are learning with our prior knowledge and previous experience as we seek to make sense, our own personal sense, of things that are new to us. We all bring our own different and varied prior knowledge and previous experience with us wherever we go, each one of us. You have probably noticed this. We are all different. So we need to connect not just with our own prior knowledge and previous experience, but also with the prior knowledge and previous experience of others. We need each other to help us make judgments as we analyse our own firm. We all have different listed companies to analyse, just as we bring different prior knowledge and previous experience with us, as we together seek to make our own sense of the world of accounting and its place in business. This sort of learning will change the way we view aspects of the world around us. And as we do this, we will find we change in all sorts of ways as well. Watch out, studying accounting can change our lives. Well, it has changed mine. This is what a university education is about, as opposed to simply passing a series of assessments and getting a degree. Now, passing assessments and getting a degree is a great idea. It will help us get a job one day and will also keep our parents or partner happy along the way while we are studying. But it is not enough. Nowhere near enough. It is not enough to go through material in university courses, regurgitate it in assessments, and then forget about it. We need to do much more than this. We need to learn for real at university. This sort of learning, real learning, will stay with us for the rest of our lives because it will become a part of us, part of who we are and of how we see aspects of the world around us. We usually only have one chance in our lives to get a university education, and this is our chance to learn something for real about accounting while at university. And there are literally billions of people in the world who would kill to be at university but will never have the chance. So take the chance you've got to do some real learning. And if we learn how to experience real learning at university, we can take that with us for the rest of our lives and spend a lifetime learning more deeply. We can do this because we will now know how to learn. Surface learning, simply reproducing clear-cut facts, which you find you end up largely forgetting anyway, will not get you there. It might seem like a quick and easy way to go at first, but it will leave you disappointed, bored, and discouraged with your university experience in the end. And it will certainly not take you forward in your business career to where you may want to go. As with our learning, so it is with accounting. Accounting is not simply a list of all the accounting standards. It is not just a list of rules. One of the reasons for this is that you cannot have a rule for everything. And if you could, where would you put them all? Business life and businesses are just too complex and varied. Even the different businesses that are operating a short walk around me in Yeppoon, Queensland, are so varied. See Chapter 1, Section 1.1. So there are no clear-cut accounting rules available to cover every conceivable situation in business. They simply do not exist. In this section, we'll see that the International Accounting Standards Board, IASB, and the Australian Accounting Standards Board, AASB, have prepared a conceptual framework which forms part of GAAP, part of the rules of the game of accounting, that can help guide accountants about how to prepare financial statements. So these accounting concepts are also part of the game of accounting we need to understand if we're going to be able to make sense of the financial statements of our firms. Accounting concepts. A firm's financial statements set out a particular way of viewing the economic and business realities of a firm. They set out a virtual firm that seeks to describe some of the key aspects of what is really going on in a business. The financial statements are, of course, not the real world of business themselves. They are a simplification of a business. But can a firm's financial statements help people outside a firm connect to and understand a firm's economic and business realities? Can they really do this? To help us understand how a firm's financial statements may be able to help us do this, we need to make sense of the key accounting concepts or ideas that lie within a firm's financial statements. As accounting practice has developed in many parts of the world, different people have had different views about what concepts or ideas would be most useful to help a firm's financial statements support many different people to better understand and engage with a firm's day-to-day business realities. Many different views, thus potentially many ways of firms preparing financial statements. Since the 1980s, there's been an attempt by various accounting standard setting bodies in the world to set out the concepts or ideas that should underpin the preparation and presentation of financial statements to be used by people outside of firms. The International Accounting Standards Board, IASB, has prepared the IASB Conceptual Framework for Financial Reporting. The Australian Accounting Standards Board, AASB, has adapted this conceptual framework to Australian circumstances in the AASB Conceptual Framework for Financial Reporting. AASB Conceptual Framework. Accounting standards are always changing and developing. Existing accounting standards are being altered from time to time, and new standards are also being introduced for new and emerging issues. The AASB Conceptual Framework guides the AASB in its development of accounting standards in the future. The conceptual framework is also useful to accountants when they are preparing financial statements to help them apply existing accounting standards to specific situations. They can also guide accountants when facing areas or issues where there are no current accounting standards. In this way, understanding the conceptual framework is part of understanding the game of accounting. The AASB Conceptual Framework states that the objective of general purpose financial reporting is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions relating to providing resources to the entity. ASB Conceptual Framework, Para 1.2. The ASB Conceptual Framework does recognise a wider range of users of financial statements, such as employees, suppliers, customers, governments, and the public. Other parties, such as regulators and members of the public other than investors, lenders, and other creditors, may also find general-purpose financial reports useful. However, those reports are not primarily directed to these other groups. ASB Conceptual Framework, Para 1.10. In this section, we have seen there is more to accounting than a list of rules, just as there is more to our learning at university than simply regurgitating clear-cut black and white facts from experts. Accounting concepts and the conceptual framework can help guide accountants to help make judgments as they prepare a firm's financial statements. In the next section, we will have a look at accrual accounting and some other general ideas that influence the way financial statements are put together.